Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, November 4th, 2019. It's about quarter till 3 Eastern Time as I'm starting this video, and I want to do a follow-up to the video that I published about 3 weeks ago, a little less than that, the generic and specialty drug manufacturers trade idea back on October 15th. I want to follow up that for a couple reasons. Number one, I continue to see bullish developments in this sector. And number two, there are a lot of these trade ideas that are coming up to price targets now, others that are breaking out, some still offer objective entries, some you want to be booking profits on. And most importantly, and I said that at the beginning of this video and I said in the notes here, there are times where I come across a sector and the entire sector, or at least a good majority of the stocks, look either very bullish or very bearish. And then in some cases, such as this one, you don't have an ETF. If it was easy enough to just give an ETF for specialty and generic drug maker sector, I would have been glad to put that out there as an official trade idea. So what I said in many cases, there aren't. So what I said in the video, and I'll say again, I like to take a shotgun approach, and I mentioned doing that back then. And by a shotgun approach, I mean figure out, I like the sector A, I like these trade ideas, and so what you can do then is take anywhere. It all depends on how much time and money you have, time to manage a portfolio or multiple positions, and of course money to diversify. Now look, commissions are now zero at most brokers, so there's no reason even somebody starting out can't take a relatively small position. I like to diversify to at least a half dozen, sometimes a dozen or more names. And then finally, as I said in that video, and I'll say it again, the goal here on the site, I mean, it's educational. I share things that I've learned the hard and costly way over the years. I try to pass along tips, but of course it's also to make money. And I can say this emphatically, and if you go back, the vast majority of the trade ideas, and I actually said at the beginning of this video, 90+% are these unofficial trade ideas. I just can't possibly mark up charts for 37 stocks like I covered in this video, list price targets, do follow-up posts like the official post. So again, this is where a lot of the money's been made lately, and I see a lot of comments in the trading room, people becoming frustrated about the broad markets. It's not really conducive to trading, nor is swing trading when the VIX is down at the low end of its range. You cannot effectively swing trade the market. Swing traders make money when volatility spikes. That's when the S&P and QQQ start moving. So all right, enough on that. Again, I would encourage you, I know it takes time to listen to these videos. This one was 37 stocks covered. It took a while, but let's dive into it. I'm not going to go over them all here. I will just highlight the ones that stand out right now so we can keep this a little bit shorter. And again, the two takeaways are, if you took any of these, great. I'll do updates on some of those, and if not, there may be some more trading ops for you here. So again, to find that video, if you can use the search icon, type in generic and specialty drug manufacturer, or the easy way is I listed all the stocks that I cover. Any post on the front page, you have these symbol tags down here. Any stock I mention or ETF will be mentioned here. You can see they're clickable links when you move they change color. That means you can click on it, and that will load all posts that I've ever made on the front page. These are homepage posts. These tags here only include homepage posts, not the trading room. Trading room, you'll have to use the search icon. That will then load the post. Or another way to do it is go here. Click on resources. That brings you into the support center. Down on the bottom is this right here, the one on the right. Here's a search function, but down here's the tags. So if you type in, let's say one of those stocks was TEVA, I believe. Yes, covered TEVA, TEVA, and then click that, and boom, it's going to load all front page posts where I've covered TEVA in the past, and of course in chronological order. Okay, so let's dive into the charts. I started out here with coverage of the sector. What we'll do is I'll pull the video up here, and this is the first chart I covered, and that's the sector. Again, it's not a tradable, there's not an ETF. This is on TC2000. They give it the symbol IX 1860. So we'll do that. That was then, this is now. That was about 49.16 at the time. And you can see since then it went on to break out above the triangle pattern. Pretty clean breakout so far. Traded on it for a little while, impulsive candle on Friday, and it's continuing to move. So now we have a breakout in the sector, which even further confirms a lot of the bullish nature of the charts and the stocks here. Okay, so like I said, I'll skip some of those in the video that don't have any significant developments or didn't stand out at the time. But so this was the second stock covered, MYL Mylan, and again, this is a video screenshot. We'll jump over to the chart now, and you can see it's moved up within. So objective long is was at the bottom of the triangle pattern. The sector is moving up. Therefore, if you're a betting man or woman, as if you're trading or investing, you are in a sense, then you are going to bet that the breakout will be to the upside as long as the sector is bullish. Now, it doesn't mean that this one has to break out. Again, but birds of a feather flock together, and so far that's been the trend. It's moving in line with the sector, so still room to go. And then of course your next buy signal would be or objective long entry to break out above the downtrend line / top of triangle. First target 2272, and if things continue well for the sector, this would be at this point in time my preferred swing target. All of these are potential targets. I just don't think the market has that much gas in the tank. Maybe I'm wrong, and what you do is just trail it up. But I think right now that's significant resistance. If you get a breakout of the triangle, I'd expect at most a minor reaction there, and I'd just tell you this is my preferred target. That's MYL. Okay, and then we have CGC. There were several cannabis stocks that are included in that sector because that would fall in. Obviously, they're not generics, but they're specialty drug makers. So, like I said, this category is really two separate sub-industries or subsectors of the pharmaceutical or industry, and that's specialty drugs and generics. So, your pot stocks, things like that, are your specialty drugs. CGC had a bullish falling wedge pattern back then and highlighted, and it went on to break out and had a nice rally from there. I can't put my measure crosshairs right on the any lines on TC2000. They get moved. It's a little quirk, but it's probably rallied about 15% or so from there. And look, it's pulled back. That was a resistance line or support level, and it's come back to that level, 1892 now, and looks to me like it offers another objective long entry here to cycle back in on this pullback. So you have the breakout, initial corrective wave, and next leg up, hopefully here to this either of these two downtrend lines, price resistance overhead. It's not a hard level. I'll leave the line where I had it. There was just a hair over 24. Again, if you continue to see momentum in the sector. Okay, the next stock covered was TEVA Pharmaceuticals. That's an Israeli-based drug company, and they were at 697 at the time, and you can see TEVA's moved up now. Where were we here? It was 690. That's a little lower, but yeah, about almost 30%, and it's coming right up to this trend line. So here's one that there's a decent chance, and let me say a decent chance, not a strong likelihood of a reaction here, because there was only two reactions previously. If we get one here, it'll be the third pullback there. If we do get it, you have support here, support zone you can buy back into, or TEVA may just want to push on through there and may not get a reaction. I always say, and this is just me, it takes 3 reactions to validate a trend line because any 2 points can be connected at random. So I had that trend line there before, watch it, but I still think TEVA makes it up here at least 965. And if it can, I would tell you, I would expect a reaction on or around that level, and especially with it up, what I say, about 30% so far, definitely be booking some profits there. So, and then always, recycle back in, but I think the stock will need to base for a while, even if it's going to be longer term bullish and break out above there. Okay, and then we had PRGO, PRGO Corp. And you can see it's working its way up here within this price channel, but what stood out to me then and does now, well, we'll get to this, is now really this one hasn't broken out yet. You have this downtrend line, and I gave you a target here of about 67.73 if and when that downtrend line's breaking out. Again, that was then. This is now pushing up against there. So I can tell you this helps, doesn't guarantee we'll break out, but it further validates that trend line. We continue to have reactions off there. So you look for a breakout there, may come in, and so far this price channel has been capping all advances. So you may get a reaction there, and then of course if you can take out the top of the channel, that would be bullish. Now I think it goes up there because I view this, there's a lot of things I see on this chart, but I see that it broke out above this level. It's been holding above here, back testing. It was support back here. It was a big old gap back there, and I do again favor a move up there. But you can use an initial target again if you want to just take quick profits, because if it gets there, that would be it depends when it gets there, because it's an upward sloping line, about a 10% gain or so. Not one of my favorites, but certainly stands out, and again worth mentioning. And ctlt was the next one covered in the video. You had a downtrend line right there, and that one has since broken out. So you have a buy signal triggered, you had a breakout, back test, actually also back test the 200-day. It's not really running hard, and it's got the PPO signal lines coming up on that zero line that tends to act as support and resistance. So I have to say my convictions aren't as high, but again, shotgun approach. You never know which ones of these are going to take off. It would be ideal if the PPO can get above that zero line, and on this one also break above the recent highs, and that would take us up here to my target of 53.16. Again, not one of my favorites right now, but if you're in it, I just wanted to do an update. And if it pulls back, you have support here that may, as long as there was momentum in the sector still looks bullish. A pullback to this level would also be an objective long entry. And ACB was mentioned in there. That was 381 at the time. Downtrend line here on the daily chart. I also shared a 60-minute chart. I believe I've shared an official trade on this one as well. That was then. This is now. Right here. And so you broke out, back tested, and again, I've covered these pot stocks. They just need a little jump start, kick start. They're kind of, a lot of them broke out, had a little rally, but this one's just kind of moving sideways since. So like I've said, I've done updates recently. Look, I would wait for a little more evidence before adding to some of these pot stocks that I've highlighted recently, such as just simply a break above the previous highs, and otherwise focus on some of these other ones that are moving a little better in this specialty or generics. But as of now, like I said, not enough to get rid of that one. That's one of the many that I took and still own. But again, that's how I talk about, you take a shotgun approach. It's the same thing as diversifying your portfolio, if you will, between stocks, bonds, cash, commodities. At one point in time, your gold sucking win, but your stocks are doing great, and then vice versa, and that balances things out. And the same way, when you take a shotgun approach, you don't bet it all on one stock within a sector. If you're going to do that, you're better off with an ETF, because then you're going to have the diversity. Okay, next up we have TARO, T-A-R-O. That in the video at the time, a couple weeks ago, it was at 75.60 right here, and it just broken out of the bullish falling wedge, had positive divergence. So that was an objective long entry. That was then. This is now. Stocks from there just rallied. Not much else to say. That's a breakout and follow through on what you want to see. It's up about 8% from where it was highlighted then. And let's see if I can pick up anything in this chart now. Let's see. We had a reaction. So now we have a trend line. Now we're watching this. You have this ascending, descending, broadening wedge pattern. So we pretty much need to pop above today's highs. Remember, nothing goes up forever. It's getting close to overbought. Here's how. If you're wondering what I would do, and I honestly I can't remember if I have this one. I have a lot of these, and I'll just what I do is every so often I'll go in here and I'll raise stops if I like one. I will micromanage a lot of these trades. I'll take it out if I expect a significant reaction. That's not the case here. So here's one where if you got it in or around that time of the video, I can tell you there's some support here. I didn't have it at the time, but about 77.02. That would be a minimum stop. That was a little bit above where we bought it there, so that would at least sure a break even or a small profit. Or of course you could raise tighter stops and let it run as long as the momentum is in the sector. And right now there is clearly upside momentum, as I've illustrated on both the sector chart that we started out with as well as a lot of these stocks. You have reaction highs, but I don't see a lot till that 95 target. So this one has the potential from where it was highlighted, where we took it, if you took it back then, that's about a 25% gain. And so that's the thing about trading. You want to swing the big runs like this, or short the big rips like this, or dips. I mean, you're going to have to ride out the counter trend rallies. Nothing goes straight up or straight down. And to figure out how much to use as a stop, it all depends on how much you're shooting for. If you're happy with 8%, then get out. You hit a downtrend line where it's just a little bit off it now. We're not down that much today. Give it a little back. Take your profits. Or at this point, you already have a reaction. I think if you wanted to be conservative that way, just tighten stops up just slightly below where we're at now. That could keep you in the trade and allow for a lot more upside. That's what I would consider if you're one of those. I know some people are apt to take the quick profits when they get it, especially if you're relatively new to trading, but that's TARO. And TLRY, TLRY, was in this bullish falling wedge pattern. This is the screenshot from the video back a couple weeks ago. It went on to break out, had a nice surge up that day, actually added this as an official trade, and we hit our first, second, and almost hit our third target. That's a case of one that just fell shy and then reversed from there. And so technically it's moved through the stop, so it's no longer an active trade, but it was certainly a profitable trade at that point. You know, you should have had stops raised. When you get close to a third target, you should at least have stops above entry, you know, or at entry at that point. But again, it's, you know, like a lot of these pot stocks, they're just, you can't, you know, it's not below it. It's held the breakout, and it's still above the recent lows, so it could very well have another thrust up. The pot stocks just need that little kick in the ass, if you know what I mean, to get going, and they might not get it. They're in a confirmed bear market right now. So like I said, I'm just looking for a counter trend rally, short covering squeeze, and they're all part of this whole diversification thing, you know, shotgun approach. And it's not just in pot stocks. I know people love the pot stocks because they, you know, were moving up so big, you know, had such huge gains several years back when there was all the hype. But like I've talked about in the past, and for fundamental reasons as well as technical reasons, you know, that's over now. You know, reality set in. They were overhyped and you know, way overpriced for what their profit potential is for any time in the foreseeable future. And again, it's in the charts if you don't believe me fundamentally. I've talked about my fundamental reasons why I think they were, you know, a bit of a bubble back then, even though I was almost all long and bullish back then. But again, no more. Got out of that a while ago. And next up, PCRX. The video was covered when it was about $38, just under 38. And I said it's the story of, you know, this one just keeps finding support here about 35. You're in a bullish sector. And from then, it has rallied, what was it? That's $38. And we're about right about here, 38. So about a nice, you know, 11% lift so far, straight up from there, because again, the sector has been rising, and we're coming up to that downtrend line resistance. That would be a logical place to take profits. Probably get a pullback there. You can also have a uptrend line here. So you could do one of two things: just take your profits there, and you have a price, you know, resistance just above. Let me move that resistance line a bit higher and give you a number on it if you're riding this one up. But again, I think taking profits there makes sense because this one's in a big trading range. If it takes out the downtrend line, it could certainly run. And so again, many ways to skin a cat, many ways to trade a stock. You can just continue to raise stops, let it ride as long as the momentum's in the sector, or try to micromanage, you know, take profits if that's hit. You get the quick profits, nothing wrong with getting out and regrouping, moving on to the next one. But again, if the downtrend is taken out, look for about 44.40 resistance, and then somewhere up here about, I'll give you that level. I don't know why it wasn't turned on before, 47.50 or so. And IRWD, had a member in the trading room mention this one today, saying it was something about it being near a downtrend line. I'm not sure. Maybe they have a different downtrend line. Maybe you could draw one off these reactions. This was a screenshot from the video. And at this point, I remember when I was, you know, on this stock talking about that shotgun approach and what I was doing, taking a lot of these names, just sprinkling enough cash in each one to build up a decent, you know, position for the sector. It was at $9. That was then. This is now, just a couple weeks ago, and it was right here. And you can see this sucker's already rallied about 22%, and 23 actually, closer to. And just beautiful price action. Went on, took out the downtrend line, then took out that 976 resistance. In the video, I had mentioned my preferred swing target right now is that 1150 area. These are unadjusted targets, so, you know, I'll be selling a little bit below that. You don't want to try to squeeze out every last penny. Probably get a reaction there. Could be the final reaction if the market peters out soon, or the sector. But if it pulls back there, and the sector looks okay, I'd look to re-enter that one, and then your next buy signal would come on a break above 1150. Now that's a buy signal. You could also have an objective entry should it pull all the way back to 976, and if the sector looks okay at the time. But again, up about 22-23%, getting close to that preferred target now. And as I said, that's a longer term potential target if the sector continues to hold up there about 1387. Next up, MNTA. It was at 1388 when it was highlighted in the video there. You have a target here at $15, and on this one now, that was then, this is now, it is went out, took out that target, and it's back testing. So that's about what I say, 1358 was it? Somewhere in there. Yeah, it's about a 17% or so gain so far, and just, you know, nice price action. Now look at this, this here is an objective entry. Now I will say this, it became bought right here on the RSI. So what I see is a stock that overshot my target by a slight amount, has come back and back tested. So $15 was a resistance, and that now should act as support. I added a trend line here, smaller trend line. So if you're still long this one, you know, it's up 17 or so percent, or was at the recent highs, you can continue to ride the wave. I think it heads up here ultimately to that, at least that 1988-ish target, or at this point, it's prudent to raise stops. You have a trend line, both trend line and $15 price support, so somewhere below there. Now, if you run a stop too tight, you run the risk of it getting clipped if the stock goes on. So a little bit above there, if you have, you know, 17% or so gain, you can afford a little give back. Well, there's a little give back already off the top, but again, looks constructive. You know, breakout, overbought, so it's coming back in to work off those overbought conditions, and again, next target there. But like anything, you know, don't fall in love with it. If it goes much lower, I can give you you know, another stop here. I could tell you right about right here. That would be the lowest stop I would use, a little bit below 1425. There's some support there, and that would mean this breakout above that level has failed clearly. You can allow a little dip down below, but much below 1425, and I would let it go. Next up, SUPN, Supernus, I guess, Pharmaceuticals. Just this was the screenshot here. You had this nice clean downtrend line. You had a big divergent low down here. Stock was at 2608 at that time, and from there you broke out. And from that point, I'm going to try to get the breakout point, which is right around where it was covered. This guy has rallied about 11, almost 12%, coming very close to my target, initial target, which is the downtrend line and the 2961. They come in close together, so a little more upside, and then I'd expect a reaction. However, this is a big rising wedge. Let me just tell you, this is kind of like a micro call within a bigger macro call. The micro call is maybe one more reaction there, maybe not. You have a good entry. You're up double digits on this trade. If you took it there, you know, probably get another reaction. But if the sector continues, this is the macro picture. The bigger picture is this multi-year downtrend line, almost 2 years, a year and a half at least, with a lot of clean reactions, and on top of that, an intersecting resistance level. So if it can pop that with conviction, you come on up here to my target 3365, and possibly that 3891-ish target. What does that mean to you? You know, if you willing to ride out any pullbacks, 30% from, you know, where it was highlighted and where it broke out right after that, giving you, you know, a buy signal there. Or, you know, if you're happy with 15% or so, take your money and run, and then wait. You know, take profits if it gets there. Just a little shy. You don't want to hold out for the last penny. And then if it, you know, if it pulls back or not, if it breaks out, either way, when it breaks out, then you can jump back in for the ride. So like I said, many ways to skin a cat, many ways to trade a stock. For those of you, if you're not American or not familiar with that expression, please, it's not a cruel thing. It's just a figurative saying in English language. Okay, next one up is OPK, Opco Health. The stock was at 208 at that time. I listed a first target at 242. We had just broken out of this downtrend line that had been consolidating sideways. So from 208, from there in the last 2 weeks, we went up. We were right here. Let me try to get the 208 mark and measure it out for you. There's 209, close enough. Look at that, to the penny. Hit that 242 target. That's about a 16%, 16% gain in just a couple weeks there. Maybe overshot the target by a penny. It hit a high of 243, close enough for government work. And boom, there's an example of swing trading. You know, I wouldn't have listed it as a target. It was a solid target. That gave you an opportunity to get out book profits, get 16%, and then sidestep this. I don't know if that was earnings induced or maybe clinical. Well, it's not. Generics don't have drugs in clinical trials. Specialty makers could. So I don't even know what OPTO does. I don't even care. The charts tell me what to do, not the fundamentals. At least not on this sector and these stocks. But that's it. 16%. Hit your target. Get out. And at this point in time, not crazy about it, and just move on to the next. All right, next up we had EGRX. It had just broken out of this triangle pattern in the video, plus the $60 level. Was at 62.70 right here in between the breakout point in the next target, 65.57. That was then. This is now, and boom, there you go. Close enough to that target now. You can take profit, or well, you should have. Your last couple of days, you had several tags of that level or near tags. Like I said, always take a little shy of the actual resistance level, and you know, it looks good. You may pull back. Hard to say. I can only say this. The next objective buy point would either be a pullback to about the $60 level and or this uptrend line or the downtrend line. You have triple support below. You have the $60 price level and intersecting downtrend lines, or it powers on through if the sector goes in a solid break above 65.57, and that opens the door to that next target there. That's EGRX. Okay, next up was ENDP, Endo International, and this one I said you know the breakout had occurred long before I came across the sector right here. That I said that was a very bullish, nice divergent low, strong divergence breakout, and then so these are the lines I had drawn in the video. I said there was no hard buy because we already had broken out. And I said so this one you just take it here where it was at 358. With a stop somewhat below this line here, and let it run up to that target there. And so that was then. This is now. The stocks gained 40%. So again, this is the shotgun approach thing. Sprinkle a little cash. So far, what are we talking? Probably easily, on ones that a lot of these that I've covered so far, double-digit gains. On average, and this one just continues to zigzag higher. So again, this is kind of like dip buyers that like to buy the market, buy the pullbacks, to buy the dips. That's what works on this stock so far since the breakout. And again, I don't see a lot of resistance until it gets up to my target there. There is some coming in here, but 688 is the target on that one. And of course, periodically raise your stops. Don't let a 40% gain get away from you. You get to that point, raise your stops. Okay, next up, FLXN, Flexion Therapeutics. Like I said, this was from the screenshot in the video. Just a beautiful, nice, clean, bullish falling wedge, big on the daily chart. Yeah, with the the stock hitting what I said would have been my first target at the time, 1552, but I said go back in. This was probably the first corrective wave in a new uptrend, with the next stop being the next target being 1776, and that was then. This is now, and here it is. I mean, just beautiful charts. That's why I'm doing this update, this follow-up. There it was. We were right here when I highlighted it. And since then, look at that, boom, right to that 1776 target. That's good for a 27% gain in just a couple weeks, where I mentioned it there. And so there's a chance, take profits. That target's hit, book profits here. Yeah, I should already have a standing limit order on that one. I believe I took that one. And then if it comes back to that 1552, that would be a next objective entry. Again, if the market's holding up and the sector's holding up. You guys know my thoughts on this market. This thing is just, right now we don't have any sell signals, but trust me, we'll get one soon. We'll get a correction in the broad market. And what I do like about this sector is most of these stocks, if not all of them, are not S&P 500 and Dow components and NASDAQ 100 components. Some of them might be in the NASDAQ 100, or at least a NASDAQ composite, I can tell you for sure. But that's a different index. NASDAQ 100 is the top largest 100. But again, there it is. So you got your 27% gain. Get out at this point. Or if you're holding out for the the big run up to that 28, I do think it makes it up there ultimately. Here's a trend line. You can set a stop below and just let it ride. It may power right on through there. Okay, next up was EGRX. What I'd said on that one, this is a screenshot from the video. It's maybe on a break above, because it had broken out. We had a downtrend line here, and it broken out, consolidating, so it's on a break above that. And this one so far was at 407. That was then. This is now. It did go on to break above there. There's that the breakout right here. There's that downtrend line. If I can get it here for you, broke out there, and this stock has gained. What is it? 407. It was at. So that was 404. If I can hit 407, close enough. There's 409. And that's about 30%. So 30% gainer so far. It is at, I'm going to add a level here since I didn't have it on the other chart. You have a previous reaction high. Oh, there, yeah, and another reaction, yes. 30%. Time to either take the money and run on that one, folks, or set your stop below the 457-ish level. Give it a little room below this trend line if you're wanting to let this one run up here, because it'll probably ultimately run up here to test the bottom of this huge gap back here about 726. But again, 30% profit at resistance, pretty tempting to maybe take the money and run, or like I said, just put a very tight stop, and that way you'll still lock in a 26% gain, let's say, and then allow it to run, and you might turn that into a 50+% winner. And we had LCI, not very exciting, but it was, you know, here it's support. 1043 is a decent, very decent support level, and you were just above it, so you could go long there. And since then it's bounced off that support level. I don't know exactly where it was in that video, about 20%, so maybe exciting to some. Again, you know, it's a thing you can try to, you know, try your damnedest to squeeze out 3-4% in the stock market over the last three weeks, or, you know, 20-30% on a lot of these stocks. And it's just, you know, go where the easy money is, go where the opportunities are. Okay, next up was COLL, Collegium Pharmaceuticals, just a beautiful downtrend line, coming off a divergent low. It was at 1210 back then, and it went on to break out of the trend line. So if we just, you know, the objective buy point would have been a break of the trend line right around 1205 or so. And that's about 13% on your money since then. So coming up to that, I had a resistance target zone here, 1378 for a stop. It certainly has the potential to come up here. That's a pretty big breakout. So again, you know, just trail your stops up, take profits here, and cycle back in on a pullback if you get one. Either or, it's up to you. And next was SLDB. Big old huge gap there between 1192 to 2179 to be backfilled potentially, and it popped into the gap, but it couldn't hold it, but it's still pushing up. So I would look at this point for the next break above that recent high right there, where it failed to enter backfill the gap once it entered, but it's working its way up within an uptrend. And so again, watch for a break of that level, and that's a pretty nice gain. That'd be, even from there, it'd be about a 60% gain to backfill that gap. Biosciences and anything to do with biotech, you know, I haven't done my due diligence on hardly any of these companies, none recently, some in the past, but the biotechs, you got to be careful. Any company with drugs and clinical trials, especially if they have a narrow pipeline like this one. If I haven't heard of it, it probably has a narrow pipeline. If you heard of Amgen or the big ones, yeah, they have a pretty good pipeline. These little guys, everything is banking on the success of one or two stocks. So just kind of, I don't know if that's the case with this one, but you want to maybe do your due diligence if you take it, because if they get shot down in clinical trials, these stocks can gap 50% against you. I've seen it many times before. But again, that's what diversity in a shotgun approach helps. You know, if you have a dozen or more names in the sector and one of them craps out on you and the other 10 or 12 are flying high, great, no big deal. And next up, OPTN. This is one of my favorites. This is one of the ones I took at the day of that video, and I'm still holding on to this one. I love this. Is just couldn't play out better. I've posted a couple updates in the trading room along the way on this one. Maybe one of them on the front page. Just a beautiful inverse head and shoulders bottoming pattern. Again, that was from the video, and since then it's just played out. Formed that right shoulder. Beautiful symmetry on the pattern, and today it broke out up right now about almost 12%. It was up a little higher earlier, and this one from today's highs has gained 40%. It was mentioned at $7, 40% in just a couple weeks, and I'm still favoring at least to move up here to 1091. Now it reports on November 12th, so I can almost assure you, no guarantees, but I can almost assure you at best we're going to hit that first target before the earnings, so that's an opportunity to book profits if and when we get there, or trail stops up now. Hopefully that breakout holds. You know, you want to stop somewhere below the above the neckline, maybe a trend line here. I know I'm giving you a lot of areas, but you're going to have to hold this one if you want to hit this target here, which is my longer term swing target. It's also the measured target for the inverse head and shoulders bottoming pattern. You're going to need to ride through earnings, so that one can go either way. You're going to have to run that risk. Up to you. You can take the quick 40% now, or if it gets up here, you'd probably be at 50% or better if it gets to that target before earnings, or ride it out. Again, if you've got all your money or a huge chunk of your portfolio in just this one stock, you are gambling. You're taking a big risk, and you do that long enough in trading, you're going to go back. You're going to go broke. But if it's one of many positions and the earnings go against you, it's not going to kill you because you're going to be diversified. It's a small piece of the big pie called your portfolio. So either way, just a nice looking stock, and like so many, just playing out so far. This is where the opportunities have been, and this is why I'm doing continued updates in this sector. Okay guys, just a few more. I know it's a long video, but if it wasn't worth it, I wouldn't be doing it. It is MNK. This one was also highlighted here. This might take the cake so far for the winner up to this point. It was highlighted here. You had a support around 220 and a downtrend line. Again, that was a couple weeks ago. This sucker has gained 80% since then. It broke out of the downtrend line, defended that 220 support, has not looked back. That is an 80% gain in just a couple weeks, coming up now to that 415 target. When we get there, we're probably going to be close to a double on our money. Good time to take your profits and run if it gets there. And congrats to those that caught. I know at least one other person on the site, a member, had said he or she was in this one, so congrats. HROW, I told you I'd go over some in the video that still have opportunity to pan out. This one's still clinging to that uptrend line, intersecting really. You had this triangle pattern, and it's really pinching at the apex now, and this is the measured target. So I'm going to move that measured target down there. It still roughly aligns with that 1091 target there, 704 the first stop. So there's one. You take it with a stop somewhat below. You have price support 2 here around. I would use a stop just below. No more than this, not much more, a little bit below 461. I know that's a pretty big move from 503, but if you're targeting $7 or almost $11, that's in line. You just take a smaller position. That's HROW. And if I didn't show the video screenshot, that's where it was at the time. Okay, go a little faster here, just a few more. ADMS, that was in the video, coming off this divergent low right there. Divergence has been confirmed. It continues to move higher. Doesn't look like much, but I'm sure it's 10% or so gain so far on that one. And still looks good up to at least this 548 and or downtrend line target, and quite possibly more. Okay, I'm having to skip over a few that still look good, but again, visit that old video. It's a couple weeks old, not too old. CTST, I'll just end it here with this one. It broke out that day and mentioned target up here. It's blurry, I know, when I take these screenshots or the video screenshots, but went up, hit that first target 161, pulled back. So this is just a case of so far breakout and a hit of a first target resistance level, corrective wave. And so if we can get another leg up in the cannabis stocks, then this one should take out the 161 level and head up here to 246. Nice divergent low in place at the time. And we will wrap it up here. Very long video, but again, this is where the money's to be made, and so it's worth my time to do these videos, and hopefully it's worth your time to sit and watch those. I know it's so much easier to just be spoon-fed an ETF saying buy this here, sell it here. Or I can pick 1 or 2 of these stocks out of the 30 something I covered, but guess what, if they are the 2 out of the let's say 37 that don't work out, or underperform, you underperform the sector. And for example, that's why MNK 80% gain. If that was one of your 10 positions, that would have been weighted out to an 8% gain for you there. Assuming equal percentages, of course. But you get my point. So again, hopefully you enjoyed it. I'll wrap it up here and try to get some other trade ideas and some other sectors out to you guys soon. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.